How do Islamic finance principles apply to FinTech? Imagine a world where your digital wallet not only makes transactions easy but also aligns with your faith. That's the promise of Islamic finance principles blending with FinTech. Islamic finance is built on rules that promote fairness, transparency, and ethical behavior. When these rules are applied to digital financial services, they create a new way of banking that respects religious values. For example, traditional banking often relies on charging interest, called riba, which is not allowed in Islam. FinTech platforms must avoid interest-based models and instead use contracts like Murabaha, which is a cost-plus sale, or Ijara, which is leasing. These contracts make sure both parties share risks and rewards fairly. Another key principle is avoiding gharar, or excessive uncertainty. In digital finance, this means all terms must be clear and easy to understand. If someone invests through a FinTech app, they should know exactly what assets they are buying into and what risks are involved. Transparency is essential to prevent misunderstandings or unfair practices. Islamic finance also forbids activities considered haram or unlawful, such as gambling, alcohol, or pork-related businesses. FinTech companies need to screen investments and transactions carefully. They might use automated systems to monitor and ensure that funds are not supporting these forbidden industries. Technology helps enforce these principles in many ways. Digital identity verification, known as electronic Know Your Customer, helps confirm users are genuine and prevents fraud. Blockchain technology creates secure, unchangeable records of transactions, boosting trust and compliance. Artificial intelligence can analyze data to detect suspicious activity or potential violations of Islamic rules. Practical examples include digital wallets that allow users to send money or make payments without interest. Crowdfunding platforms can enable small businesses to raise funds through profit-sharing agreements instead of loans. Peer-to-peer lending platforms can match investors with borrowers using Shariah-compliant contracts. In essence, applying Islamic finance principles to FinTech means designing digital services that avoid interest, reduce uncertainty, and steer clear of haram activities. It also involves using technology to build trust, transparency, and fairness. This approach helps millions of Muslims worldwide access financial services that respect their religious beliefs while embracing innovation.